Are miners being forced to sell their Bitcoin around the $28,000 price range, and if so, why is this the case? Also, the Uniswap community are voting down protocol fees for liquidity providers. The Yuan Stablecoin team got arrested, and Hong Kong are opening their doors to crypto. And crypto airdrops may not be as great as thought, but there could be some good use case for them, which could benefit the ecosystem's main coin if done right. Let's find out what this is all about in today's video. Stay tuned. Hello and welcome to Cryptos Chain. My name is Claudio. CoinDesk announced that Bitcoin miners may be forced to sell their Bitcoin around the $28,000 mark due to profit margins narrowing in the recent weeks. This is because miner difficulty is continuously increasing, and the machines produced before 2022 appear to be unprofitable. The question is, how much longer will they sustain, and will the whales support the miners in any way? Bitcoin can also drop in difficulty if there are less miners. So if a large number decide to step out, there will always be some that will operate at a loss with the idea that they'll recover those costs and a lot more in the coming future. Just like on some of the POS chains where validators operate at a loss yet still do it because they want to support decentralization and think about the project in the long term. CoinDesk also reported that the Uniswap community voted in a snapshot poll recently where they turned down a proposal for charging fees from liquidity providers. Over 45% of the community had voted for no fee, while 42% voted for 1/5 of the fee generated by Uniswap version 3 and 12% voted for 1/10 of the fee to be doled out. This is a good thing because LPs are providing that liquidity for every trader to use Uniswap, and if they're charged fees, they might decide to no longer support certain pairs and remove that liquidity altogether. Cointelegraph reported that the Yuan Stablecoin issuer team CNHC had been taken away by law enforcement officials, and there was a photo in which their Shanghai office was empty with a message stating that buildings' assets have been seized by law enforcement and vandalism is prohibited. I guess that's the risk when doing business with crypto in China, and plans can easily overturn. CNHC has apparently raised $10 million in its Series A round led by KuCoin Ventures, Circle, and IDG Capital. The team said that they planned to use the funds for expansion in the Asia-Pacific region, and they were in the process of moving their headquarters to Hong Kong. Also, more bad news from the Singaporean inter-blockchain communication protocol called Multichain, which had plunged 30% on a delayed backend upgrade, and rumor of a Chinese police arrest of its core developer because their CEO Zhang Zheng is not reachable. They can't obtain the necessary server access for maintenance, and as a result the protocol would need to suspend a number of affected cross-chain services. Talk about centralization in the case of a crackdown. Moving on from the bans in China to adoption on the neighborhood land of Hong Kong. This has been a hot topic recently in the crypto community because we all want that next part to trigger the next bull run after a dreaded bear market throughout 2022 and the first quarter of 2023. Apparently on the 31st of May, the Hong Kong Virtual Asset Consortium was formed to approve the top 30 cryptocurrencies by market cap for listing, and Wu Blockchain have reported that Bitcoin and Ethereum are getting listed on 5 indexes, while Polkadot on 4 together with Litecoin, Solana on 3, Avalanche and Cardano, as well as Polygon on 2 with Cosmos and just 1 called Bitwise. This is definitely bullish for crypto and specifically for the larger ecosystems, so I'll be keeping a close eye on the progress of this to see how it plays out. But ultimately it's retail that have to be interested in things to really take off, in my personal opinion. Now moving on to the topic of airdrops, we all know the Cosmos ecosystem has been very generous when it comes to airdrops for staking ADA, voting in referendums, or performing cross-chain transfers or other specific tasks. But are airdrops sustainable for a team to bring in users, or are they temporary? In an article by Chain Debrief, they said that users haven't necessarily stayed but actually dumped their coins over a period of 100 days as per a report, and actually hurt the project because the sentiment drops together with the price. They even recommended you sell those airdrops within 5 days from receiving them to actually see any sort of value. Captain 3Max also mentioned that while founders should look at alternatives rather than focus on those airdrops, other methods that they could still use through airdrops could be through vesting so that they don't get dumped as soon as possible, or also based on milestones, or maybe a combination between time and milestones. We know that on Cosmos, voting turnover is very good, with it going over 20%, and that's mostly because validators can vote on behalf of a coin holder who stakes with them. and you can then supersede that vote if you decide to vote yourself in a referendum. Thus, the validators say it no longer applies. So maybe to improve this on Polkadot, it might be possible to reward DOT stakers and referendum voters with parachain coins rather than reward them through crowd loan contributions. This would incentivize network growth and participation, but the big question would be how to actually get a parachain lease if the team don't hold enough DOT to win. So there would need to be a different model, and perhaps with pay-as-you-go parachains, this may actually change. Thanks as always for watching, and please don't forget to hit the like and also drop a comment below with anything whatsoever if you have something to say. Follow me on Twitter or join the Telegram community to stay in touch. See you in the next one.